The number that matters if you want to either get wealthy or stay wealthy or live a decent life is the rate of expansion of the currency supply. And if the currency supply in US dollars is expanding at, say, 10% a year, then that means you can expect every scarce desirable asset that anybody with money in America or anybody with money with dollars in the world is going to want to buy, it's going to go up at a rate of 10% a year or more. And so if you're not actually investing, growing your cash flow, growing your assets via that number, you're getting poorer. Right? You're not getting wealthier. And once you actually do that and you do an analysis of asset classes and investing, what really pops out, which is fascinating, is the S&P index is simply tracking the currency supply of US dollars for the past 100 years. As when you invest in a diversified portfolio of stocks, you're not making money. All you're doing is preserving the capital that you had. You're not getting poor. You're not getting richer. You're just tracking sideways.
In a recent interview, Michael Saylor, the co-founder of MicroStrategy, discussed the impact of currency supply expansion on wealth and asset prices. Saylor emphasizes that the rate at which the currency supply of US dollars is expanding is crucial for understanding wealth and investments. If the currency supply grows at 10% per year, then desirable assets will generally increase in price by at least that amount. He argues that you're effectively getting poorer if you're not investing in assets that grow at least as fast as the currency supply expansion. Investing in a diversified portfolio, like the S&P 500, is essentially a way to preserve capital rather than grow it in real terms. This is because the stock market's performance often merely tracks the currency supply growth. Saylor notes that while it might seem like you're getting richer in nominal terms, the face value of money, in real terms, the purchasing power, you're just keeping pace with inflation. With that being said, how can you actually grow your money and outpace inflation? Let's find out. Here are more clips of Michael Saylor's interview about what Bitcoin is and how useful it is. Please take a little time to like this video and subscribe to the channel to show your support. Thanks and enjoy.
You have 100 billionaires in a room, and then one middle-class dude with a $300 gun walks in. Who's the most powerful person in the room? Right? The guy with the gun. The gun is a very special purpose machine for projecting and channeling energy. If you actually want to get productivity, if you want to spend $300 in order to hijack $1 billion, right? You do it with a gun. But on the other hand, if you want to protect $1 billion without spending 10 or 20 billion, you protect $1 billion with the hardware. So the engineering of Bitcoin plugs you into semiconductor technology, to Moore's law, to electricity. And what it also does is it creates this very interesting dynamic where if you have billions of dollars of Bitcoin in Manhattan, your Bitcoin is being defended by Bitcoin mining off of hydroelectric power in Bhutan. You might be getting defended. The network is defended by a Bitcoin mine running on stranded natural gas in Kazakhstan. And so if your money is only defended at a bank in New York and the mayor of New York wants to seize your money, he just takes it. What you want is a very distributed network, and you want incentives for every nation state and every type of actor to build massively powerful centers. If you see these Bitcoin mining centers, they're 100 megawatt, 200 megawatt data centers, and you think, well, what would incentivize someone to build such a massively powerful, defense mechanism? And the answer is somebody's got a dam with water flowing over the dam and no one wants to buy their electricity. And so they've decided to build a Bitcoin defense center in order to monetize the running water on their dam 8,000 miles away. So there's a genius to that engineering because it's continually expanding, continually growing, continually becoming more efficient. And it anchors the Bitcoin network into the electrical network and into the technology network of the world. And it incentivizes good semiconductor engineers to be thinking all the time about how to create more efficient defense mechanisms to keep a hacker from hacking the network. And that just takes us to the last point, which is ethics. If you want an ethical monetary network, like, do you want to trust all your money in a bank run by 3 people that you know? Or do you want to trust all your money in a bank that's collectively owned by humanity where nobody in the human race can possibly hack the bank? And it's one of them is a protocol beyond the reach of any individual, any corporation, any government. Bitcoin is a system so diffuse that no one entity or person is systemically important or influential, right? Whereas Ethereum or any of these other proof of stake protocols, if there's a company, if there's a founder, if there's an engineering team, if you can identify them, then they can change it. And the ability to change the network undermines the integrity and the security and the immutability of the network. And the one thing you want with a monetary network is you want to know that 100 years from now, 500 years from now, 1,000 years from now, the network's going to maintain its integrity. And if it relies upon any individual action, you've already failed. That's why, for example, you speak English and you don't speak the language made up by your best friend that's a little bit more efficient, that's got special words in it. You're buying into a shared protocol of all of the smart money in the human race. And the smart idea, if you study history, is don't trust anybody. Don't trust yourself, right? Like you could say, Michael, would you rather invest in a network where you control it? I'm like, no, right? I'm the weak link, right? We're all the weak link at the end of the day. So you want to put your energy and your support behind a network which transcends any institution. That's what secures you. That's what makes it, safe and economically sound.
As the interview continued, Saylor discussed the security of Bitcoin as a decentralized monetary network compared to traditional financial systems and other cryptocurrencies. Saylor emphasizes the ethical aspect of a decentralized monetary network like Bitcoin. Unlike a traditional bank controlled by a few individuals or a company, Bitcoin is a protocol collectively maintained by humanity, making it trustless and immutable. This means no single person, corporation, or government can alter or corrupt the network. Bitcoin mining operations are spread across various geographical locations and use different energy sources. This decentralization ensures that Bitcoin is defended by a global network, making it resilient to local political or economic pressures. For example, if a government wanted to seize assets in a traditional bank, it could do so relatively easily. However, Bitcoin's decentralized nature makes such an action far more difficult. Here's more of Michael Saylor as he explains how Bitcoin is a more reliable way to store your money.
You can't store it for a lifetime. So if you have some money, you can't just store the money. If you want to keep your economic energy, you have to gamble it or invest it. You have to speculate with it, or you worked your entire life, you have a certain amount of retirement, and now if you store it in the bank, it'll be worth nothing. So you have to go and invest it in the stock market. But if you pick wrong, you lose it. So we basically force people to be gamblers, speculators, or hedge fund managers if the money's broken. And the money is broken. So what is the significance of Bitcoin? Well, let me say it a different way. You just take your money, take everything you earn, you buy Bitcoin, and you wait, and it goes up 20 to 40% a year forever. Or you take your money and you invest it in a bank account and you get 3% after tax, and everything goes up 10 to 15% a year in price, and you just get poorer and poorer. Or what are you going to do? Buy GameStop at the right time? Are you buy a building, run an Airbnb? I force you to go, and forcing you to be a hedge fund manager is horrifically inefficient for the society. It's just as inefficient as saying, okay, be your own dentist and doctor, right? If the medical system was broken, you have to be your own doctor. It's not good for society. What happens? People die 20 years early is what happens. So when you have to be your own banker or be your own hedge fund manager, what happens is you just get poor. Or you lose faith in the future. If I told you your money was going to be worthless in 36 months, what would you do with it? You would spend it. What if I told you your money's going to be worthless next Monday? You would go out this weekend, make it decadence weekend, and you would just blow it all. You would buy anything. Things you don't need. It's like, if it's for sale, I'm just buying it. So Bitcoin actually solves the problem by saying, well, what if you just had a money that the government couldn't debase, the bank couldn't steal, that would last forever? Okay, it profoundly changes incentives, because now a corporation, instead of buying back its stock or instead of dividending out its cash flows, would just keep the money. And the money would go up in value 20, 30% a year. So that's what MicroStrategy did. Like, what's our secret? Right? We're just holding the money and it's an appreciating asset. Let me try to make one more analogy that might help. It's like, you're an athlete, your blood is carrying oxygen. Oxygen is energy. If you're an athlete, you need the oxygen to circulate and you need the blood. So before your race, I show up and I say, well, conventional wisdom is I need to bleed you now. So I take a bunch of your blood and now you run the race. And then next week before the game, I show up and I bleed you again. And what if I just bleed you every week? What if I bleed you every day? Are you as good an athlete? If you're not sure about this, try this experiment. But I think any athlete will tell you, no, the goal is to have as many red blood cells and as much oxygen in your bloodstream when you compete, not to bleed the blood out of your system. So when the government is telling you you should use a currency, the currency is the blood of your corporation or your family or your civilization. When I'm inflating the currency, I'm bleeding the civilization. And in the extreme, if you do this thought experiment, if I just double the currency supply in a banana republic and your company had whatever, $1 million worth of currency, but I double it and now it only buys half as much, and I double it again and it buys half as much again. You see it's,
yeah.
Now take it back to MicroStrategy. In 2020, we had 2,000 people working as hard as they could work to generate $75 million a year in cash flow. And then we had $500 million of actual assets. And then the government was increasing the currency supply by 20% a year. At 15% a year, if they increase the currency supply at 15% a year, then you're losing $75 million of capital value of wealth every year for the 75 million you're winning. So at the 15% inflation rate of the money supply, 2,000 people are working as hard as they can, doing 100,000 things right for an entire year to stand still. And if I crank the inflation rate up to 30%, I tilt the playing field such that you're running as hard as you can and you're falling backwards. So another way to say it is everything you do is worthless. Your time is worthless. Your life is worthless. You're failing, right? And then one more analogy. I put you in a rowboat and you row 7 miles an hour and the wind starts blowing the opposite direction, or the current is blowing the opposite direction, and you're actually rowing as hard as you can and you're not moving at all. And then the current picks up and you're rowing as hard as you can and you're going backwards. But there's this point where you're rowing 7 miles an hour and the current's 7 miles an hour, and then you're in the middle of the Atlantic and you horrifically realize you're going to die because you're not getting across, right? You're not going to make it. And so what do? You reach down, you pull up the sail. You can't row. You can't row against current. You put up the sail, you catch the wind and let the wind blow you. You're going to have to change the way you do work. In an inflationary currency, right, you probably can't outwork inflation no matter how hard you work. Unless you can grow your revenues. If you ask your boss for a raise 20% a year and you get it every single year, then yeah, maybe you can outrun inflation, but most people won't be able to do that.
What are the main challenges you see in adopting Bitcoin as a primary store of value? Do you think its decentralized nature is an advantage or a disadvantage? Share your thoughts in the comments section. If you found today's video informative and would like to receive more insights and updates on cryptocurrency and global finance, please consider liking the video, subscribing to our channel, and enabling post notifications. Stay tuned for our next episode where we'll uncover more about the fascinating developments in the crypto space. Until then, keep keep questioning, keep exploring, and most importantly, keep investing wisely. Thank you for watching, and we look forward to seeing you in the next video.